Right, so you've taken another winning trade. I'll be real. In my rule book, technically I broke the rules because I took a trade earlier than 9:45, but this setup was good. I mean, there's a continuation setup. We can clearly see that the higher time frame drawn liquidity, these weekly highs, or at least all-time highs. Whether that will reach that today or tomorrow, I don't know, but my target was actually quite a risky, stupid target, but I like to try and get a minimum of 2R. So and my target was just above a 4-hour order block, which is again dangerous, but I was willing to take that risk. I had a trading stop loss, took some contracts off, so that's all good. Obviously, this is hypothetical. I'm not doing pair trading at the moment still. Cool. So my entry was pretty nice. I was going to enter here because it looked quite nice. The reason why I didn't is because we swept some, what liquidity was it? Yeah, so we swept like a daily candle. It was a 4-hour high we swept. So I actually wanted to wait a little bit more before entering, but if I entered here, stops at the lows, which would have been around about 100 ticks. If I target where was it, it would have been like a 3R, 3.4R would have been at. But I'm happy with this win, so I waited. So what I saw on the 2 minute, we see that we get a big push up. It's actually a market structure shift because we have this sweep of liquidity. And what I said, what I typed down on the video before is that with the manipulation phase that I look at between 9:30 and 9:45, we actually kind of had it before New York Open. We swept down really fast, took this liquidity, caused a bullish SMT. It did actually cause equal lows on ES, but still it caused an SMT. Big massive push up, and this was where I was going to enter on this 2 minute retracement here, which actually, looking at it now, looks beautiful. I wish I kind of did enter here, but I wanted a bit more confirmation because it retraces down into this 2 minute breaker / 2 minute fair value gap unicorn setup, as they call it, and then it had a massive rejection off. But where I entered as well was still good. So we had this order block here, this 1 minute order block here. So now I'm starting to understand that order block is not just one candle, it's the continuing candles. Say there's 2 bearish candles and a big push up, it will start off with the highest bearish candle, which is here. So entered on that order block, was in a ton, barely any drawdown at all, big push up, hit 1R pretty quickly, so I took one contract off. Then we retraced down, and this is the beauty of price action. So we retraced down into this 2, 3 minute, 5 minute fair value gap. What's very good about it is it enters specifically into this 2 minute fair value gap, respected consequent encroachment. Not only did it do that, but it had a 1 minute total soup, so it rejected off the fair value gap, push up, came back down, swept that 1 minute low, then had a massive push up. But not only that, it rejected off of a 3 minute propulsion block. And what is a propulsion block? A propulsion block is a reinforced order block, but what's different from an order block is, see this block here, has reacted off of this 3 minute order block, right? Cool. Reacted off of that big push up, right? The propulsion block is the next order block that was caused from the reaction of the initial order block. But with this, from what I've learned from what ICT said, is that you mark out the top of the wick instead of the candle, because the whole name of it is a propulsion, so it'll push up, it'll propel really quickly. So it'll touch that wick and then push up. So not only did it cause a 1 minute total soup, it 1 minute total souped into a 3 minute propulsion block and shot up, which it did. Look at that propulsion block, beautiful, right? I'm learning a lot. I'm very happy. I'm learning quite a lot, and it's actually, I'm happy. I just wish in paper trading I had this confidence, because I'm very confident when it comes to hypothetical trades, because I'm not taking actually any trades. But it's actually a good day. I mean, the setup was A+, but obviously the only issue was that entered before 9:45. But I'm noticing all the big moves recently, like the big sweeps in liquidity, are like at 9:30 to 9:45. I know that's the manipulation phase, but if you catch on the right end of it with the correct setup, it could be good. It did edge me a little bit from my take profit, and I was getting a bit worried because we entered that 4-hour order block, but it did hit it, so it's all good. But yeah, I'm pretty happy with the result. So yeah, that's 2R. I could have just targeted here, closed most of my trade out, and then left like 1 or 2 contracts open for this high here, but I just felt I just want to take my money now and be happy with it. So yeah, what I'm going to do is I'm going to be back later on to see what's happened, as in like what's happened in the market, and yeah, see you then. 4:50 p.m. We're coming out of the lunchtime session. My predictions was correct. I was anticipating price to go up to weekly all-time highs. Hasn't exactly hit there yet, but it's in that direction. We can see that on the 15-minute. We've retraced into this 15-minute order block right here. Hopefully we can see a push up from there now. After getting that, we did get a 1 minute market structure shift. We consolidated here. With a consolidation here, with a manipulation upwards, then a manipulation downwards, and then somewhat another manipulation upwards, another manipulation downwards, and then a displacement to the upside. Reacting off this fair value gap here. This could be a pretty decent trade. Well, I don't know why I'm looking at that. It's not a good trade setup. I'm being an idiot. But yeah, I could have targeted even higher today, but I just wanted to be in and out quick. But yeah, my anticipations was clearly correct. It has gone up. But yeah, I mean, that's it for today. It's been a good day. I actually had a bearish outlook on the week, at the start of the week, just based on the fact of price coming all the way down here, which is clearly just a liquidity sweep, taking some liquidity in these fair value gaps here, these inefficiencies, and then just absolutely breaking upwards. Disrespect to the daily fair value gap that I was anticipating. But yeah, as in tomorrow, what do I expect? I'm hopefully expecting a bit of a retracement downwards tomorrow, filling at least this daily fair value gap that's going to be formed, but filling in some inefficiencies. This is like a daily unicorn setup. We've got a daily break block here, and then we've got a fair value gap. Sorry, the break is here. I marked it wrong. But yeah, that's what I'm looking at on ES, because I've been on NAS a lot recently. ES is at all-time highs, and it's just ripping upwards still pushing up. As in setups, if I could have found a setup, I'll have a quick look. So this is where the S&T was caused, also created equal lows. That's why I was a bit sceptical about entering that initial entry, but it's fine. Then what we get is by 9:45, if I was to not enter yet, we can look at we've reversed this fair value gap, pushed high, displaced the upside. Right, we actually had a break above, so that's a market structure shift. Not only is that a market structure shift, but before that we had a sweep of internal liquidity, which is perfect. What's even more perfect is notice the bodies. The bodies do not break below this wick, showing that it's a clear liquidity sweep. Even nicer. Then after that liquidity sweep, inverse this fair value gap, big push up. You can see that on the 1 minute it looks like we're breaking off this 1 minute order block. Also the 1 minute inverse fair value gap. Look on the 2 minute, it'll probably look a bit better. Perfect. So on the 2 minute we can see that we are respecting this 2 minute fair value gap here. Not only are we respecting that 2 minute fair value gap, we're respecting this 2 minute inverse fair value gap, which is nice to see. If I can do it properly. There we go. Nice. Also we create equal highs here, which is no reason for price to potentially go higher. So yeah, this could have even been a good setup really. If I was to enter here, let's go to 1 minute. Stops. I say put it here below this 1 minute order block. This is the thing about being at all-time highs. Where do you target? And that's where you have to target at like broad numbers, like 1 to 2, 1 to 3 kind of thing. But if I was looking, if I wanted to target, let's say 1 to 5, I would have hit it. And I would have hit it before lunchtime session. Before even 11 p.m, because that's when I stopped trading. It's 11 a.m. New York time, sorry. But today's actually been a good day when it comes to analysis. Like, I'm very happy with my performance. I just wish I could do it with paper trading, because I'm under pressure with paper trading. When it comes to this, I just don't feel the pressure, and I feel that I can think better. Like, we had a clear at the time. It probably doesn't look like it now, but at the time, this candle was bearish going into New York Open. It only just became a bullish candle because obviously we got this rejection off this 15-minute order block. Notice how it comes down to this 15-minute order block, bang, touches it, pushes right up. Obviously, now I've learned from ICT, it's not just that singular candle, it's the whole range of the candles. So I take it this is a 30-minute order block. No, it's not. But yeah, but you can also see that price is rejected off this 50-minute order block here. Hence why probably this just taps in and pushes up. I don't think I call that a propulsion block, but it's somewhat kind of like his one. But yeah, I also use a broad range of analysis in it, such as, I mean, if you rewatch it, I'm going to rewatch it as well. Things like propulsion blocks, like internal SMTs we see here that, you know, gave me confidence to stay in the trade. Total soup. What was really nice is we had this little 1 minute total soup into, so not only do we sweep some internal sales to liquidity in this bullish range into a 3 minute propulsion block, and notice this is why it's called propulsion block. Into this 3 minute propulsion block, taps right into it, boom, like just propels up. That's why it's called propulsion block. Listen, I'm not gonna. I believe it's an algorithm, but I'm not gonna talk. I'm not gonna go talk deep into like the word algorithm. But what I will say is these concepts, used in the right perspective and manner, these concepts do work. But I do also believe that you can succeed with any concepts, support and resistance. But it's you have to be the right personality, the right type of person, and the discipline to do it. I personally like ICT just because of you can. Any single movement, or 95% of the movement you get in the market, you can understand why it's doing it. Like, you can see right here, we consolidate, we accumulate, we manipulate down, we make another accumulation, manipulate, distribute. Notice that? Like, I can name all this out, whereas if we're, some people are like cross-moving average traders and support and resistance traders, like, they'll be doing this all the time and making resistance areas. And I'm not into that stuff really. I personally like this. We've got a build up of low resistance liquidity, sales internal liquidity, sweep all of that. Not only do we sweep all of that, but on the 5 minute, we go into a 5 minute fair value gap. So this is another A+ setup. Sweep internal sales liquidity into a 5 minute fair value gap. Respects consequent encroachment. What also adds to the analysis, equilibrium in the 5 minute range. Now we've got all those conferences. Let's go to the 1 minute. Cool. We get this. Oh bloody hell! I'm in the wrong bit. Hang on. It's this area. Still, my point still stands on that analysis bit, but I was looking at the wrong area. Here, 5 minute fair value gap. Taps into it. Doesn't tap consequent encroachment this time, but look at the 5 minute range. Taps into equilibrium of the 5 minute range. Let's go to the 1 minute. Now, we've got an internal sweep of sales liquidity into a 5 minute fair value gap. Massive displacement upwards. Perfect. This is like an A+ setup now. Right? You could have entered at this fair value gap at the 1 minute breaker. Stops at the lows, which would have been a wide stop, 120 ticks, but that is fine. Could have target up here, but if not, target 1 to 2. Would have just missed it. It would have come down. Probably would have hit a trading stop loss and went up, but that's fine. But it's all made money, right? Or if you was more patient and wanted to wait for more of inefficiency to be filled, into this fair value gap. Stops at the lows. 65 ticks, lovely. Right. If I wanted just to aim, I don't know. 1 to 2, I would have hit it. 1 to 3, easy. 1 to 4, easy. But yeah, it's all about understanding what the liquidity is, the inefficiencies is, and knowing that the high time frame bias. And I personally feel that we're going to be bullish until we hit the weekly all-time highs. I don't know about tomorrow how it's going to perform. because I like to look to the left for previous data to understand where price can react from. But yeah, looking at this price action is actually very beautiful price action. This is like the power of 3 right here. Accumulation, manipulation, let's put that in a different colour, and then we distribute to the upside. Let's put that in a different colour. No. Okay. Accumulation, manipulation, distribution, and after we get distribution, wait for that retracement, enter, lovely. Could have put my first take profit up here. But I've also learned that not every day's price action is clean as this. Certain days I could have missed out on trading. I'm starting to realise no, these Mondays are horrible to trade, but yeah, it is what it is. So yeah, that's probably it for me today. I'll be back tomorrow. I don't know if I'm going to be taking trades tomorrow because it's quite intimidating in the sense of like there's no previous price data to trade from. So yeah, but I'll be back tomorrow, so see you then.